Good morning everybody, and this is your S&P 500 setups for today. So as we expected yesterday, we bounced off the bottom of the channel, inside bar, then an engulfing bar. We did sort of swing all over the place, big up, big down day, but at the end of the day we've ended up with an inside bar on the daily, off daily support. So that to me is good enough to indicate that we have continuation to the upside brewing. So what we want to do is we want to look for structure, and the structure is going to need to be from this breakout or even a return back down to 51.97. But I think safely say 5200 has been defended. We've got a crossover of both of the oscillators at the moment and a separation, and we have diversions from the previous swing low, which is here in March. So looking for the entry point is probably going to be the key element that we need to focus on at the moment. I definitely don't think it's wise to jump in long where we are at the moment, and you can see we are trying to reject 52.35. So for me at the moment, if you look at the 3 hour, we do have an indication that we are in between the moving averages. We've got a crossover of the fast moving averages, and now we have bearish setups on the oscillators here with a separation, and it looks like a crossover for a rollover. It's back to the downside. So the bearish outlook here is quite simple. We've had a strong move down. This is a pullback in a sort of a flag. So a drop below it's going to be sort of 51.97. Let's just call it 5200. So a break below 5200 and a pullback to retest that will set up a second move down, and it'll be an aggressive move equal to the move that we've seen so far this week. So that is the one thing you need to pay attention to. Remember, on the weekly, this is currently a big red body at the top here with a fairly large tail at the moment. So 50-50 call there when you look at the 3 hour. And the minute we scroll down to the hour, we start getting a similar situation. We've reached structure at 52.35, and you can see that we can actually just add in multiple levels here. There's a very strong zone of resistance that we're in, and this is also 52.34. So 52.34, 52.35 is a very strong area of potential resistance. And if you look at the oscillators, we're just above the 150 EMA. We've got a crossover, so there's no real indication of which direction we're going here at the moment. And you can see what I mean by yesterday. We're sideways, gap up, run to structure, pull back all the way down to where we started almost before the buyers come back in again. So very typical of trend reversals when you see this kind of stuff. But although it's not, can't really call 2 days of downward traffic a trend, but anyway, I suppose on the 5 minutes or the 1 minute chart you can call it that. So I would be watching 52.21, massive gap that is still open here at 52.11. So those are the two areas that I would be definitely watching. And then at the moment we're bumping our head on 52.38 and 52.35. Don't really want to be jumping in long up here. I'd want to wait for a pullback onto one of these levels to the lower side before looking for that opportunity. And we just get down to the 15 minutes. You can see the chaos that we had yesterday. A gap up, breakthrough structure. That would have been a great opportunity for a long, but you would have been stopped out if you'd jumped in on it. If you'd waited for the structure to finish, you would have waited for a break of the upper end of this 15-minute bar and then got in on it. But anyway, strong overhead resistance here. So two ways to play this right now. Wait for a pullback onto 52.21. I think that's the only one I'm going to focus on. Let's just delete that other level so we don't get sidetracked. pull back onto that because that would be in line with the moving averages here, build a base and then get going. There is another little level just above it, which is right here at 52.26. So that's the zone. I'd wait for a pullback, and then I'd be looking to take profit again in 52.35, 52.38. The alternative view at the moment is we grind through this zone, move up, come back, build a base on here, test it, and start rolling. That would be my next opportunity for a long. Targets that you're looking at the moment, obviously this is the first target you should be waiting for, but then you do have a number of other targets to the upside. Let's just put the last one in. So you can see there's a target. That's definitely a target just above it, and then here. So what we're looking for would be 52.44, 52.50 should be this one here. Yep, there it is. So 52.50 is definitely the level we need to be paying attention to. If you just look left over the last couple of days, that has been the area that we've been targeting. So I definitely be watching 52.50. At the moment on the lower time frames, we're looking for a long back into that space. Get above 52.50, build a base, then you can start targeting this gap would definitely be targeted, and then moves higher up. Okay, so yeah, just be very cautious. I don't think it's going to be pleasant. I don't think it's going to be smooth sailing. I think you're probably going to get more of this chaos above and below the moving averages, which is always difficult to trade. So just keep your wits about you and pay close attention to your levels. Don't jump in long when you're right up against a level like that. Wait for the pullback, be patient, and when you get the pullbacks, jump in and just take profit at the next level. Okay, so bias is to the upside at the moment, but it can change the flip of a coin, to be honest. You start dropping below the lows of yesterday, that's going to indicate that we're setting up for a bigger move to the downside. So pay attention to what is happening with price and keep your stop tight. Don't just try hold on to stuff for no reason. Hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.